Welcome to another episode of Spy Trader. I'm your host, Chuckles McFinance, here to break down the latest in S&P 500 news with a side of humor and practical insights. Today's episode is coming to you bright and early on August 10th, 2024 at 6 a.m. Let's dive right in. First up, we've got a mixed bag of market trends. The Nasdaq Composite has taken a 10% nosedive since July 10th, mainly due to disappointing tech earnings and broader economic jitters. Meanwhile, the S&P 500 is showing a bit more resilience. Comparing performance, Cathie Wood's ARK Innovation ETF has struggled, significantly underperforming the S&P 500 over the past 1, 3, and 5 years, despite her recent buying spree during the tech pullback. Speaking of which, let's talk about some of Cathie Wood's latest moves. She's been on a shopping spree, adding Amazon, Roku, Coinbase, and Robinhood to the ARK portfolio. Roku saw an addition of 249,039 shares, making it her second largest holding, while 170,617 shares of Coinbase and a whopping 1.29 million shares of Robinhood were added to the basket. Sounds like Cathie's going Allen on what she believes are future tech disruptors. But there's a joke there somewhere, right? How did the financial advisor buy his house? With interest, money. All right, back to business. So you might be wondering, what's driving Cathie Wood's confidence amid the tech sector's turbulence? Let's break it down. Tech stocks are no strangers to volatility, and ARK's tendency to lean heavily into volatile sectors like AI, blockchain, and robotics means it can sometimes take a beating. Cathie's strategy focuses on long-term disruptive innovation, but it's a rough ride in the short term. Despite the optimistic purchases, ARK's performance has been shaky at best. The ETF has experienced net investment outflows of $2.3 billion over the past year, and the assets have shrunk considerably over the past 15 days. This signals that investors are wary, perhaps choosing the more stable ride of the S&P 500 over ARK's thrilling, albeit gut-churning rollercoaster. Let's pivot to trading recommendations. I know, you come here for that spicy financial advice hidden in all the chuckles. 1. Consider scaling into technology and innovation sectors. Despite the big tech pullbacks, there's opportunity in Cathie Wood's picks, namely Amazon and Coinbase. Amazon continues to innovate across e-commerce, cloud computing, and now AI. Coinbase, despite recent volatility, shows promise with strong year-over-year revenue growth. Buy in phases to mitigate risk amidst the ongoing volatility. 2. Keep a close eye on the S&P 500. For more cautious investors, the S&P 500 remains a solid option. It's showing more stability compared to niche tech funds. Look for dips to add to your position, focusing on diversified ETFs that track the index. Number 3. Evaluate long-term growth potential. Stocks like Roku and Robinhood, now bolstered in ARK's portfolio, represent companies with substantial future growth potential. Consider them if you have a high-risk tolerance and a long-term investment horizon. Before, diversification is key. Don't throw all your eggs into one high-volatility basket. Balance innovation-heavy investments with more stable sectors like consumer goods or utilities to weather the stormy market periods. In summary, Cathie Wood's recent market maneuvers remind us that playing the long game can be rewarding, but it's not for the faint of heart. Balancing risk and reward by diversifying your investment portfolio remains sage advice. As always, do your homework, stay informed, and remember, sometimes it's okay to do nothing in volatile times. That wraps up today's episode of Spy Trader with me, Chuckles McFinance. Stay tuned for more laughs and insights in our next episode, just a few hours away. Remember, successful trading is serious business, but humor makes the ride a whole lot smoother. Happy trading, folks.